Welcome to this video, which is on Tuesday the 17th of January. It's 9:30 p.m. GMT. Now, in relation to today's video, what we're going to be doing is looking at two chart setups. Okay, the first one is using charts in association with CFTC net traders positions, and in terms of the CFTC net traders positions, regular viewers will know I consider them the most valuable tool in Forex trading, and they're totally free. Why are they so valuable? Because they can give you advance warning of when a major move is coming, and just as importantly, give you an indication of how far it might go. Now, the illustration I'm going to use today is USD JPY. I've done 3 videos on it this year, first back on January the 1st, and we were saying then that we felt USD JPY should get to at least 113, and we come in at 117.65. And it's got there. So it's a really nice move. I'm just going to update the pair, okay, in this video, and something really interesting about the CFTC net traders, which gives you the confidence to hold big moves. And we really do need big profits, and we need to have the confidence to hold them. When I say big profits, we need as Forex traders 300, 400 pips or more. We spend a lot of time taking losses in the markets, so we want to get our profits, when we can get the big profits, make sure we maximise them, make sure we've got the confidence to hold them, not bank out early. CFTC net traders can help. Now, in terms of the other setup I want to look at, it's trading gaps, okay, on discounted news. Now, in terms of gaps, they're just created by greed or fear. I want to look at GBP against the USD and GBP against the AUD in relation to this. GBP sold off on fear, i.e. gapped lower on Monday. And I was actually saying in the forecast yesterday, we'd gone long GBP USD, GBP AUD. Now, they both moved up really nicely today. The pound has had a really strong move to the upside. A few people have written to me and said, did I use CFTC net traders to time that move? I did use the CFTC net traders as a backup. I'll explain. There's various inputs on that trade, on those trades. So we'll look at those two pairs as well, and then after we've looked at the charts, I've just come back and sum up. I just want to make what I consider to be an important point about how you should place your orders in the market. So let's look at the charts, and then I'll be back to sum up. USD JPY daily. What I'll do is I'll look at the price action, how I see it going in a moment. But for just new viewers, I'm just going to do a very quick overview of how we use the CFTC net traders. Now, in terms of the actual report, it shows our futures positions on the Chicago Mercantile Exchange. It's a sizable portion of the FX market. It just acts as a poll for us to see if a currency is over or undervalued. Okay, and in terms of determining whether currency is overbought or oversold, we need to look at two groups: non-commercial in red, commercial in green. Non-commercial, they're basically large funds, banks, hedge funds, etc. They have a poor performance in terms of catching market tops and market bottoms, i.e. they're normally very long at market tops, very short at market bottoms. The other group I've highlighted, commercials in green, they're the smart money. They're basically hedgers. They're not making or losing any money. They have a very objective view of the markets. They will only move their hedges if they consider something is really over or undervalued. Okay, so they're not making or losing any money. Deep knowledge of the fundamentals at important market tops. They tend to be short, and important market bottoms may tend to be long. So what we want to do is compare how the groups line up against each other. Now, this is last week's report. In terms of non-commercials, they've got 26,000 basically bullish bets on the yen against 105,000 bearish bets. So they're basically 4-1 in favour of the USD JPY going up. If we look at the commercials there, 164,000 bullish bets on the yen, 56,000 bearish bets on the yen. So they're basically 3-1 in favour of the USD going down on the JPY. Now, in terms of this being last week's report, when we first did a video back on the 1st of January, we noted that the two groups started to diverge from each other really when we went from 116 up to just above 118. They both were opposed by a ratio of 3-1 then. We wanted to get short, we waited. There was a universal consensus really that the USD JPY was going to go to at least 120. This was a significant candle for us. Test the top of that candle, down through 118, the round number, we can sell it, okay? And then we fall down quite nicely, and then we're down at the target we initially set back on January the 1st at 113, although I've extended that to 111. I'll explain why in a moment, but I want to just discuss the candle I've highlighted, which is the report candle. Now, CFTC Net Traders comes out on a Friday, shows positions for a Tuesday, okay? So this is last week's report here, and this is Tuesday. That's how the positions lined up. And I said they were 3-1 each group in terms of their ratios when we were above 118 or up at 118. Now look at the non-commercials. They're nearly 4-1. So they've come in on this candle here, or expanded their ratio to buy. Now that very often happens when you get the important market top, people want to buy the dip. So they've come in to buy the dip, and of course what happens, they get caught out and we move to the downside. Now, in terms of the ratios as they are now, I have to see how the report comes in on Friday, but I thought they've equaled up a bit, to be honest with you. I think, it's a good run down, okay? So, you come down 465 pips odd since we entered. So it's a good move. So it's going to be a bounce in our view. The bounce, I think, will come to here. I think that's good resistance. It's about 115.50. Stops need to be behind 116, back behind the next level. Okay, so I think there's going to be a bounce, and then we're going to come down to test 111. Now, in terms of when you're trading moves like this, I mentioned it before, so just to say very briefly, we like to vary the size of our position. So we'll run two trades. On the first drop down, which is a sizable one, we'll take out 50% of our trade, sell it back to the 20-day moving average at that time, get in at a better price. Then we'll bank on this candle, sell back to this candle. We took another 50% in at 114 and we've run on slightly, okay? So that's okay for us. We're in on the run on and we can put back in on the bounce, and we banked additional pips from doing that 50-50. So it's more than 465 pips. So whatever happens, we'll come out with a really decent profit. And we can basically hold for 111, and I think we could well get there. If we don't, we don't. But I have a feeling that the USD has got more room on the downside, and for me, bounces are selling opportunities. So that's the USD JPY. Okay, we're on the GBP USD daily. Just to make some points about gaps. Obviously, when you have a gap on the charts, or a reasonable size one, you don't find them that often in Forex markets. There's normally some high impact event that's caused the gap. This one is quite good because, in terms it's 122 at the settle, okay, and then we gap down, and we actually open up, 200 pips lower, just above the 120 level. Now, in terms of gaps, you've got to look what's behind the gap. Now, in terms of what's behind that gap, It's basically that the market basically assumes that there's going to be a hard Brexit. Okay, that's it. So that is discounted in the price. So, the market is then waiting for Prime Minister Theresa May, sorry, even, to talk and kind of confirm that for them, which she was never going to do. If she did, would there be much more selling? I doubt it anyway. It's in the price. So our view was to buy, okay, and look for the gap to be closed. Now, in terms of the way we did look at the CFTC net traders. If you look at them, non-commercials, they're about 2 to 1 in favour of bearish sterling bets, and the commercials about 2 to 1 in favour of bullish bets. Now, if you consider the historical extreme is just under 3 to 1, these groups really do oppose each other, and we know that the commercials will buy that full, okay? That's what they historically do, so we're assuming they're buying the full. So speculators are obviously going to increase their positions. In fact, if you look at the CFTC report candle here, when we're at the 122 level, the non-commercials are actually increasing their shorts. So 2,349 go in against 1,260 out. So they're putting in 1,000 odd shorts there, and they will accelerate those shorts on the move down. So that would be our reading of the CFTC net traders. It's not as clear for us or as such a powerful signal as it is on the Japanese yen, but it is additional confirmation, if that makes sense. Now, in terms of, I've isolated this candle here and drawn a line, but you'll actually notice there's absolutely no support there at all. Okay, what I'm just using here when I was deciding to come in was just that it's a round number. Okay, so what we've done is we've fallen to the 120 level, and it just basically doesn't go any lower. So basically, why not come through this candle here? That's what we did. So it's a very tight entry, okay? And we're just assuming that we are going to get a move to the upside, and a really good one if Theresa May disappoints the consensus view, which she just was going to do, basically. And then what you get is the filling of the gap, and then she goes right up to the target set at 124. I always think, when you get a gap and it's generated by fear in this case, and the event is expected, that's it, So I always think it's worth going against the consensus. And obviously this one came right. If it had gone wrong, it wouldn't have been too much risk. We said 120, the round number, is providing support. So we're just going to drop our stop away from the round number. I put it at 119.50. I don't want to get caught just with a quick spike through. So a little bit back. Obviously this one worked out okay. If it hadn't, it would, I'd still have done it anyway. It's just a good risk reward opportunity in my view. So I hope that makes kind of sense. Then let's move on to GBP AUD. Okay, here we are on GBP AUD. Now, in respect of this chart, you'll notice I put up the CFTC net traders positions for the Aussie dollar against the US dollar. Now, the only reason I've done that is just so we could see the positions and cross them through with the positions we just saw. So we can see the non-commercials, they're roughly even in terms of longs to shorts, slight bias on the short side. Commercials, slightly biased on the long side, but roughly equal. So if we take the GBP USD, cross it through, we're going to get a 3 to 1 roughly in terms of the commercials being a bullish the GBP, and obviously the non-commercials being bearish the GBP by the same ratio. Now, in terms of the pound, it's sold off across the board really, but the reason I really liked this setup is because it's a much bigger move down than GBP USD. Okay, so I think the spring is going to be big, or the move up is going to be big, probably bigger than USD, or sorry, GBP USD. Now, in terms of actually coming in on this one, you notice I've drawn a line from the tail there across the bottom of the body, 160, again a round number, okay? And I've drawn my support here through these two candles and those two candle bodies. So that's where my stop is going to be behind. But where do I enter? Yeah, I just can't see any level to come through particularly. So what I'm going to do is I'm just going to let it bounce off the 160 level and basically come in at I think 160.40. Okay, so just let some strength come in. What happens? She comes up and she fills the gap, and she's heading for this level here. Although I actually think she's going to go all the way back up to the 20-day moving average up at 168. So that should be hopefully a really nice move. What we're going to try and do is bank 50% out around here, and then basically leave the other 50% run, get the pullback. Obviously I don't exactly know what's going to happen with this one yet, but the basic logic behind this one is the same as GBP USD. I just really like the look of this one as a technical setup. Also, I like the fact that momentum was very oversold as well. Both the RSI and stochastic, and they both hook up quite nicely. So we'll see how this one pans out as well. But gaps, as I've said, I normally look for them to get filled quite quickly. In this instance, with the BR exit, it's going to be a hard Brexit, being discounted by the move or the gap lower. Just thought it was again a decent risk reward trade. So that is GBP AUD. I will come back after that summary there of those three currency pairs. Now, in relation to those pairs, obviously that's my view right now. It can change in line with the market action. If you want my daily levels and daily chart analysis, you can simply click on the link beneath this video. Now, in relation to placing of trading orders, I'm all in favour of doing it in advance. Okay, so setting the level you want to come in advance, your stop and your target, then walk away, then update your trades at the end of the day. The reason I think that is the best way to trade, or it certainly is for me, is because you've detached any emotion from your trading decision. If you are sitting at a screen and you're seeing prices flying around, your emotions are more immediately involved. Okay, now for me, for example, let's say I was watching the British pound against the USD today. It's gone up above 123. I've got a good profit. Yeah, I've got 124 as my target. It pulls back, let's say maybe 50 pips. That might panic me out of the trade. Okay, so I would take the profit too early, even though my analysis says it should run on to 124. Okay, so I think you detach the emotion from it if you do your analysis in advance and only update once a day. That's just my personal view. I just find sitting around at a screen stressful, boring, and rather be doing other things. I think once you've done your analysis, okay, those three trades went really well. Okay, if they'd have all gone wrong, it wouldn't have particularly bothered me. Well, I wouldn't be happy, let's say, but I've done the analysis that I do in line with the way I've always traded. I know it's a probability game, so I just don't need to sit around and watch. I either get a profit or a loss, doesn't matter. Over time, I'm looking for my edge to work for me. So that's just my view, but I think a lot of traders would probably find it useful to do that, because I honestly do feel that it's time consuming sitting in front of the screen, stressful, and you can get impetuous in the trades that you make by seeing too much in terms of the short-term price action. Just my view. Anyway, that is the video for today. I hope you enjoyed it. If ever you want me to analyse any currency pairs, I'm looking for inspiration for new videos, please feel free to email me. Take care. Have a good day.